Hey, everybody. I've talked about Simon Property Group several times, and management just gave a really interesting presentation that kind of suggests that this might be a great time to buy. So before we dive in, please take a moment and click subscribe to my channel if you don't already. And please check out the link you see on your screen for a message from my sponsor, The Motley Fool. You can get the top 10 stocks to buy right now. So at last week's REIT Week event in New York City, Simon Property Group's management team gave a presentation, and its opening slide said that the company is the most undervalued real estate stock in the market. You can see it right there. If you're not familiar, Simon is a real estate investment trust that specializes in retail properties, specifically shopping malls. It owns or has an interest in more than 400 retail properties. 215 of them are in the US that it owns completely. It has 35 outlet properties in international markets, and it owns a little less than one fourth of a European company that has 135 retail properties. It also made some interesting investments in the recent years as several major retailers went bankrupt. It acquired retailers like J.C. Penney, Brooks Brothers, Forever 21, Aeropostale out of bankruptcy. But this is a very small part of the business. A lot of people believe that this is one of the reasons the stock hasn't been doing well, but the company is quick to point out that combined, all this makes up less than 5% of the company's earnings. So, as management says, investors have probably placed too much emphasis on this. So the real value in the company is the shopping mall portfolio, which might not sound like a big thing right now, considering e-commerce, but you might be surprised. Um, so just kind of a few tidbits here. The Premium Outlets brand is a massive industry leader. They are by far and away the leader in the outlet industry. They have about two-thirds of the market. Simon acquired Premium Outlets in 2004. Since then, the company has increased its net operating income at a 7.5% annualized rate. That's including, that's at a time when e-commerce has been growing very rapidly. So very impressive results right there. Simon is a very efficient company. Its size definitely helps with that. It's by far the biggest mall operator. So you can see right there, its overhead, which is the bar on the left of that chart, is much, much lower than other mall operators. Um, and when you look at just its biggest properties, its most valuable real estate, Simon is a very top heavy REIT in terms of its property values. It has several properties that are worth over $1 billion. Some of the biggest mall properties in the world, some of the most valuable ones, the Forum Shops in Las Vegas that's attached to Caesar's Palace is a Simon property that's one of its top properties, for example. It considers 46 of its properties to be either A plus or A plus plus rated. And those in the past decade have grown at a 6% annualized rate in terms of net operating income. That's the best decade for e-commerce that we've had so far. And Simon's malls have still managed to grow revenue and net operating income at a pretty impressive rate during that period. The stock has not rewarded that in recent years, but maybe it should. Simon thinks it still has a lot of growth potential. It has two new developments under construction right now, two expansion projects going on right now. It's adding mixed use elements, so it's diversifying away from just retail. It's adding either apartments or hotels or both to 5 properties in its portfolio right now. And it sees a lot more opportunity to do that in the future. And with $9.3 billion in current liquidity and about 1.5 billion in annual cash flow, it has more capital than any other mall operator by a mile, and has the opportunity to pursue anything that it sees that could add value. Now, why does management think it's such a great value right now? Check out its valuation. Historically, Simon trades at about 15 times funds from operation, which is the real estate version of earnings. It currently trades at less than 9 times FFO. It has about a 7% dividend yield, which is remarkably high for this stock. And you would think that the business wasn't doing well by those numbers, but it really is. The business is performing very, very well. It's proving its resilience even with economic headwinds and a recession on the horizon. And now could be a great time to add. I've added shares of Simon to my own portfolio several times in the past couple of years, and it's on the top of my watch list when it comes time for me to buy some stocks in July. So I'd love to hear what you think. Please leave me any comments. I do my best to respond to all of them individually, and thanks for listening. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit
www.fool.com/Frankel to receive the top 10 best stocks to buy now.